Hi, my name's Joe O'Connor, founder and CEO of the Transformer Company, and I help professional advisors, consultants, and veteran business owners become even bigger, better, and bolder versions of themselves so they can achieve the financial freedom they deserve. So, what's this about? Well, Wealth Wednesday is a brand new newsletter that I'm releasing on a regular basis to keep you informed of the markets, what's going on in the financial markets, and how you can take advantage, and especially at this current time because things are quite challenging. In fact, this morning I was only at the Transformer Business Network, which is a networking event that I organised back when the pandemic started. Yes, all that time ago in 2020, around about April, May time. And, you know, the reason I set it up was to help guide and support business owners. And we've come on a whole journey since then. And I'm proud to say in our group that we've helped businesses. In fact, yeah, we've helped businesses, business people, business owners who were thinking of going out of business and just handing it all in, forgetting about it. And now they've actually expanded and gone on to employ more people and doing great. And of course, we've got the next challenge coming up now with high inflation and things not going to plan exactly. So, and this morning I was chatting with them about what the last quarter has been, up to September 2022. And prices in both equities and gilts fixed interest has been persistently high, with inflation high as well, and central bank actions being the key driver for asset prices. UK inflation, the CPI index, the Consumer Prices Index, which I'm going to talk about in the next video blog actually, because I want to go into a little bit more detail. There's all these technical terms, technical phrases out there in the financial market, and you may find it helpful if I explain what they are and how they affect you. But that CPI is now 10.1%. Which isn't as bad as what my father was thinking of when he was speaking to him early in the year. He said, it's going to be 15%, and I didn't exactly agree with him. But anyway, it's 10.1% as of September 2022. And the Bank of England has responded on the 3rd of November 2022 by raising interest rates. The UK base rate is now standing at 3%, which is 2.7% higher than at the start of the year. Yes, that's a massive jump, and 1.75% higher than at the start of quarter three. That's massive, and in fact, we can go back 33 years since you've seen a hike as big as the recent one. And in the US, the United States, the inflation CPI is at 8.2% for the year, up to September 2022. And that's down from 8.3% in the previous month, which may be an indication that inflation is decreasing, but yet we're still to find out, because that will be governed by how the government reacts on the autumn budget statement and what the Bank of England does as a consequence of that with interest rates. So core CPI, so the core strength of CPI, excluding food and energy prices, however, is rising and stands at 6.6%, suggesting inflation could be stickier than initially thought. And looking at the US, the Federal Reserve continued its upward trajectory on interest rates, rising, and the Fed funds rate to 3.25%, 3.65% higher than at the start of the year, and 2.15% higher than the start of the third quarter. Fixed income prices adjusted to higher interest rates as the markets demanded higher yields. Over the quarter, 10-year US Treasury yields moved from 2.97% to 3.8%, keeping pace with interest rate expectations. Similar moves could be seen in the UK, with a 10-year gilt yield up from 2.2% at the start of the quarter to 4.1% now. And in September, the former UK Chancellor announced a mini budget that was quasi-quasang, including capping energy prices and reducing taxation to stimulate growth. Now, we all know what happened there, because these were unfunded taxation reductions and were poorly received. In fact, I'm not sure how exactly they arrived with Liz Truss, how they arrived at doing that. It must have been in a little meeting over tea or a cup of tea or a cup of coffee, because none of the usual processes went through, or seemingly, like Office of Budget Responsibility reports and other things, statistical information to back up what they were intending. And this led to gilts and sterling to sell off significantly at the quarter end. The Bank of England made a highly unusual step of intervening, you may remember, and to ensure an orderly functioning of the gilt market, with temporary purchases of longer dated UK treasuries. High bond yields may be presenting an opportunity, though high levels of volatility are leading to caution. So what's happening in the market is it became completely mixed up, because usually gilts are steady as you go, and yet the reactions of the mini budget caused a massive fluctuation and volatility in the market. And foreign exchange markets on a trade weighted basis, which is a measure of the currency against those of major trading partners, the US dollar reached a 2-decade peak in September. And I'll come on to the Federal Reserve and what that does in a later blog. And you could read in the newsletter, it goes into it in a little bit more detail as well. So, in summary, much of the weakness came through in September after the mini budget, with investors nervous on the costs of tax cuts, because with an action, there's always a reaction, and the reaction came because the unfunded tax cuts just didn't seem feasible, plausible, or any sense, which then you know what happened then. And the prospect of higher borrowing costs fed into equity markets and volatility continued. The strength of the US dollar was a positive, as conversions of US dollar-based investments into sterling helped valuations for UK-based investors. So, what I'd like to do at this part of the video, because I'm coming to an end now, is just say let's wait and see what this mini budget gives us. I'll continue giving commentary on what I think it represents, and what I would like to say as well is to bring in the new year. I'm launching a new monthly program of money mindset and motivation podcasts, and you can also get the chance to visit joeteams.com. Yes, that's joeteams.com, to learn more about something I'll be launching very soon, because I want to create multiple streams of recurring income for you, and you can join the VIP waiting list for the joeteams.com, and you'll be entered into a prize draw of free personal coaching with me, which is worth £1,995. So until the next one, and until we meet again, have a brilliant day. Thank you.